Alright, so let's check out what's happening with the SPY. So you can see we've had a strong bounce today from the open of the candle body to the top. You can see it's about 1.6% move, so not too bad for the SPY. In the last few videos we've made for the SPY, we said that there's two possible scenarios that would play out, and none of them have played out. We're still in the waiting zone, so we're still going to need to see what happens. Now, to reiterate these, if you didn't watch the last video, we said we were either most likely going to break out of this 200-day moving average support here, which I've drawn on this like orange line so you can see it a little bit better. Now, we're either going to come up and test this 200-day moving average and hopefully break out of this this sharp resistance that we've got here on the daily candles, or we're going to come up basically where we are now and have another tumble below the 200-day moving average. Now, we said that it's quite likely to do this because you can see almost every time we go below the 200-day moving average, we break down. We have a breakout. Let's see what this price was. So from the candle body open, it was about a 3.6%. so you can still see that even though we had a stronger bounce here, we eventually rolled over. So that's what I want to point out to you guys, so you know not to FOMO in yet. Over here again, you can see that we got above the line, broke below, above, below, above, below. So this is why I have my predicted chop pattern over here. If we just come back to the data, yeah, so you can see this is the exact reason why we had this chop pattern down here, because normally the SPY breaks down below the 200-day moving average, and if it does continue to break below it, it normally always has a fake out above the 200-day before it rolls over again. So we're going to need to see if we can break this downtrend here. Now, best case scenario, if we broke out in about 2-3 days, you could see that we would be above the 456 level for the SPY. So if I take a measure move tool, you can see that's about another 2% move to the upside. So it's not completely out of the books, but also remember that if we do come up to this trend line, even if we do get above it for a day or so and then we start rolling over, we are still very likely to come back below the 200-day moving average. Now, the next level down for the 200-day moving average is unfortunately all the way down here at the 200-week. If I just switch over for you, you can see that the 200-week is all the way down here, which from where we are now is approximately another 23% dump. So nothing is off the cards yet. SPY is still in decision time. We need to see what's going to happen. Not too much volume stepping in on the RSI. RSI is still bottom down here on the 27th of January and spacked up to 43. Now you can see sometimes before we roll over we go up to 49 RSI, which is this point right here. Let's see if we did anything here. So we came up to 51 RSI, but we weren't really that far down. Up here we came to 44, which is the RSI level that we're at here, before we rolled over further. Let's see here. Here we came up to 41 again, which is basically the level we're at right now, and we actually came up to 56 here. So what I'm going to be looking for in the next couple of weeks and days and weeks is to get above this this red line here, which is around about $455. So once again, none of this is financial advice. They're all just my opinions on the market, and you've always got to do what's best for you. Peace.